Well, in midweek trade, we are seeing a crypto rally with Bitcoin and ETH soaring by at least 5%. And this does come on the 2-week ceasefire now in effect in the Middle East conflict. Now, the FDIC has approved a proposal to implement Genius Act requirements as well as standards. And this is a milestone in the legitimization of digital assets. It provides the actual regulatory teeth for how banks can issue stablecoins. Meanwhile, there's an ongoing rush for banks to make deals with crypto firms. And through the rise in cross-border payments as well as tokenized assets, TradFi's crypto adoption can help to accelerate global DeFi adoption. Well, joining me this morning to weigh in is Kevin Patoul, CEO and co-founder of Keyrock. Good morning, Kevin. Thank you so much for joining us. So first and foremost, Keyrock received a $1.1 billion valuation and backing from British bank Standard Chartered's SC Ventures. So can you tell us what's going on here and what it signals for the broader market?
Sure. Thank you very much for having me. I think it signals that we're really at a tipping point in terms of the adoption of digital assets by larger financial institutions. To be frank, it's something that has been an ongoing theme within crypto markets for the last 7-8 years. Institutions are coming. What we've seen over the last 2 years is that we are there now, and it's something that of course has started to gain more and more mainstream momentum with stablecoin, with Circle going public last year. And I think that what we're seeing now is that this logic of digital assets are not just about crypto, but really about rewiring financial markets at large. Well, this logic is really something that's been accepted by institutions, and they are keen, to partner with companies that have been building in the space for the last 8-9 years. And this is really what this signals. We're moving away from crypto as a separate kind of new exotic asset class, and more towards a technology really reshaping and rewiring markets at large. And this is really what it signals.
Yeah, and Kevin, while I have you here, banks do need to upgrade their infrastructure in order to adopt blockchain. But one of blockchain's drawbacks could be a lack of privacy. So tell us what banks actually want from the infrastructure.
I mean, of course, there are different features in terms of privacy, openness, and those things can be modulated depending on the needs and the use cases. I think that at the end of the day, what matters is that blockchain allows to more efficiently move value and to do so fully digitally. And I think that has, very clear benefits in terms of cost, in terms of efficiency, in terms of 24/7 availability, but also in terms of distribution versus what you would see on more traditional rails. So you have something that the same way that digitizing information has made it a lot more widespread and a lot more scalable. We're seeing something similar now with value. So you have benefits, quite frankly, throughout the entire value chain, all the way from back office and cost savings, all the way to the scale of distribution that you can reach with fully digital assets, which is what blockchain enables.
Yeah, in addition to institutional adoption, tokenization has been a key theme as we kick off 2026. And the RWA tokenization market cap has jumped close to 9% over the last 30 days. So give us your take on how tokenized assets are actually scaling and what you think still needs to happen.
Sure. I think the first wave has really been around stablecoins, right? And that is, if you include stablecoin in RWAs, I mean, very clearly, this is still the biggest chunk. I think that, so you mentioned a 9% growth. The key learning as well is that things are still relatively small when you look at nominal value of, total value locked. But the market is growing. So what still needs to happen in my mind is really unlocking utility. So you have now the possibility to tokenize assets, which is great, but a tokenized asset isn't in and out of itself better. It only becomes better if you can do more things with it, thanks to its new tokenized form. And that comes, through utility, through initially 24/7 liquidity as well, making sure that you can easily get in and out of position on those tokenized assets, make sure therefore that they can be used as eligible collateral and really be used. And I think that unlocking that utility is kind of the main theme for the coming year. And of course, that's something that players such as Keyrock and in partnership with institutions such as Standard Chartered, we're very much focused on doing.
And finally, before I let you go, we've talked about infrastructure as well as institutional adoption and tokenization. So what other trends are you paying attention to as we head into the rest of 2026?
So, I think that at the end of the day, infrastructure is kind of the starting point, is kind of the base layer on which you build everything else. I think that clearly I mentioned that tokenizing asset is a way to fully digitally represent and eventually exchange value. Now the question is like, who is exchanging that value? And clearly today this would be done, predominantly by people. I do think that more and more with the exponential speed of AI development, we are going towards more and more, agentic value exchanges. And so that's definitely a trend that we are, paying very close attention to, because eventually I think that most of the value transfer done on these digital rails will not be done directly by people or institutions, but eventually by agents acting autonomously. So I think that's a very big trend for us, as for, I guess, every other part of the market, frankly.
Well, Kevin, we will have to leave it there for today, but thank you so much for joining us, and thank you so much for sharing your perspective as well as your insights.
Thank you.